Thank you for the introduction, Chrissy. Thank you to the conference organisers for having me here. It's been a great conference and it's great to see good attendance today. I'm here to talk to you about Viking Mines and the investment opportunity. I'll start with mentioning our ASX ticker code, VKA. Write that down, have a look and look at the history because I think I'm going to present a compelling opportunity for you to invest. Usual disclaimer and information, take the time to read that at your leisure if the information is on our website. So I'd just like to begin with our corporate snapshot and overview. As I've mentioned the ticker there, we have around 1 billion shares on issue. Our share price is traded relatively consistent throughout the last 12 months as shown on the chart, currently trading at a cent. That gives us a market cap of about $10 million. At the end of the last quarter, we had a strong cash balance of over 5 million Australian dollars in the bank, which puts the EV of the project at today's share price at just over $5 million. I'm going to talk to the projects and demonstrate the huge value that we have in there, which really recognises how undervalued the company is, especially when you compare to some of the peer companies working in the same space. Our share registry is quite tightly held. We have about 4 or 5 shareholders that have about 35 to 40%, but in the top 20, around 50%, with 12% held by the directors. So we've got skin in the game. So the two projects I'm going to talk to you about are Canegrass and First Hit. Canegrass is the battery minerals project, which is the more advanced of the two. This is outcropping hard rock vanadium magnetite mineralization. There's more than just vanadium here. We have iron, titanium, copper, nickel and cobalt as other commodities which we expect to be able to release value from. We're in a good location, about 6 hours from Perth. We have bitumen road and gas pipeline within 20 kilometres of the project, and it's only 420 kilometres to port to the west. Again, bitumen roads the whole way. The township of Mount Magnet's less than an hour away, and that has serviced airstrip, bitumen strip with regular commercial flights. So good access, good location. First Hit lithium and gold project. This is north of the famous town of Kalgoorlie, located 40 kilometres west of Menzies, which is a couple hours north of Cal. And we have a large land package there of 493 square kilometres. Key thing here is we're about 60 kilometres south and along strike of Delta Lithium's Mount Ida project, which has a resource in excess of 12 million tonnes at 1.2% lithium. And we've completed some early work there, which I'll touch on a later slide, which shows significant potential. So now I'll go and talk in a bit more detail, firstly around Canegrass. Sorry, ahead of that, I just want to talk a bit about vanadium and why vanadium. A lot of my talks progress initially with what do people know about vanadium, and I'd say around 9 out of 10 people say not too much. It's an established critical mineral with huge growth potential. At the moment, the baseload supply, around 90% of global production, goes into the steel sector. So all the buildings around us have vanadium within the steel, and that's not going to go away. That's a mandated requirement in many jurisdictions as minimum levels. However, the growing sector is the vanadium redox flow battery. And you can see in the chart here, demand has been increasing steadily. 3 years ago, it was around 1% of the annual production of vanadium went into these batteries. Last year, it was around 10%. And the forecast growth is exceeding over 50% in the coming years. And within the decade, we're going to see a requirement to double the global production of vanadium. So the chart demonstrates that deficit. And we believe Canegrass can, in part, serve to fulfill some of that gap. Another critical component is the market supply dynamics. 91% of global vanadium production comes from BRICS jurisdictions. China is the dominant supplier with 61%, Russia next at 17%, followed by South Africa with 8% and Brazil at 5%. There's no production of vanadium out of Australia, and we've heard some talks at the very beginning of this conference from Tribeca and Scott there was talking about jurisdictional diversity, I think were the words that we used. We see a big opportunity with Viking to be able to contribute to that setting. So just have a quick look at the battery. The reason we believe that vanadium redox flow batteries are due to take off, it has a whole number of significant advantages over lithium ion. One of the key things is that it can be recharged and discharged multiple times, having a lifetime more than double that of a lithium battery, and importantly, it stays at 100% recharge capacity over that time frame. It's very easily expandable. You can just increase the tank storage, They're non-flammable, which is a key thing over what we've seen with some of the lithium batteries that have had fire issues. And importantly, it's fully recyclable. At the end of the battery's life, you can take the vanadium, you still have the value of that vanadium, which is around 40% of the battery, and you can put it into another battery, or it can be redistributed and recycled. These are being installed. There's over 100 megawatts batteries being installed in China. We're delivering power for over 4 hours to powering over 100,000 homes. So this is commercially proven technology that is penetrating the market. It's just a bit behind what we've seen in lithium. So why this is important is because of cane grass. This is a project we've been working on for about 14 months, and it's been consistently delivering on multiple milestones. We've undertaken resource drilling in the last year. We doubled the contained metal within the resource from 1 billion to over 2 billion pounds. And on subsequent to that, we've completed a pit optimization study, which I'll go through in the next couple of slides. We've also undertaken a series of metallurgical test work, which has also shown that we can extract these valuable commodities. Just for context, at the bottom of the image on the right, there's a list of the metal contained within the resource that we have. There's over $20 billion worth of value in the commodity there. We're not saying all of that is going to be extracted, and that's the purpose of the next levels of study, but certainly a large portion of it is showing that it could be viable. We have thick zones of mineralization over 30 meters thick, which results in low strip ratio projects. So none of this value is really recognized in the low EV that we have in Viking. So the pit optimization study was designed in order to allow us to focus into areas where we want to undertake our next drilling, and that was to make sure we focus on the highest value parts of the resource, and it has been highly successful. We undertook a series of scenarios looking at revenue streams from just the vanadium in our worst case scenario, through vanadium and iron in our base case scenario, through to increased revenue including the copper, nickel and the cobalt in our best case. All of those scenarios were successful, delivering a range of outcomes from 30 to 90 million tons. At a conceptual throughput of 1.5 million tons a year, that provides a 20 to 60 year operation. We've settled on the base case with the fold nose pit, which is shown in the bottom of the image on the right, and this delivered 39 million tons. And this is the area that we're going to move forwards with. There's still potential at the other areas, and I'm not discounting those, but we're seeing the highest value opportunity at fold nose. So just to focus in on that area, you can see here an image of the conceptual pit that we produced. The depth there of the pit is about 180 meters from the top to the bottom. The resource is what you can see, the colored blocks within there, and they're colored by the grade of the vanadium. The length of the pit's about 1,300 meters long and 600 meters wide. Importantly, it has a very low strip ratio of 3.7 tons of waste to every ton of ore, and this results in a low mining cost. 39 million tons sit in this pit, containing over 700 million pounds of vanadium. The current vanadium price is at a low at $5 US, but that in itself is $3.5 billion worth of vanadium within this pit. In addition, we'd expect there to be well in excess of 20 million tons of iron concentrate. Again, iron concentrate's trading around $100 a ton. So that in turn provide about $2 billion. So a significant large portion of that inherent value I mentioned in the previous slide on the resource is contained within this pit. For these reasons, this is our priority follow-up target. So the resource at the moment is the inferred category under JORC. We need to increase that to indicated, and this will be the focus of our work in the coming year. Around 3,500 meters of drilling we think is going to be required in order to bring it up to indicated, which would then allow us to advance the studies through scoping study and subsequently into feasibility and resource turning to reserve. I'll stress there are still significant opportunities at the other deposits, but this is where our focus will be at this time. The project's no good if we can't extract the value, and extracting the value means investigating the metallurgy. Met, who are actually the lanyard sponsor for the conference here, are our metallurgists. They've got a booth here and take the opportunity to catch up with them. They've been undertaking our work over the last year. We started off with doing some simple magnetic separation test work that proved positive, so we commenced on a more detailed test work program. The image on the right is the conceptual flow sheet that we would follow from mining through crushing and grinding and magnetic separation. For the magnetic separation, we provided about 80 kilograms of sample. We were highly successful in producing a magnetic concentrate. We got a 53% mass pull. What that actually means is for every ton of ore that would get fed into a mill, you would produce 530 kilograms of concentrate. And the concentrate we produced attained that high grade that you can see on the second bullet point. 1.43% vanadium, 59% iron, and 11.7% titanium. This high iron value is what makes us believe we'll be able to sell the iron product after we've extracted the vanadium from this. The high titanium at the moment we are treating as a deleterious component, reducing the value of the iron because there's a limited market. However, we're commencing on a subsequent set of test work which will look to separate the titanium, which could convert that to an additional revenue stream, which we haven't considered at this stage. The process after producing the concentrate is to roast it. So the third picture at the bottom there is of the roasted concentrate, which is then leached with water to extract the vanadium. Again, we've had a very successful step with this, extracting over 93% of the vanadium from the concentrate, which gives an overall vanadium recovery of nearly 87%. One thing that's critical is the pit optimization study we completed. This metallurgical test work was underway. We hadn't got all the results when we did it. We put in an assumed overall vanadium recovery of about 74%, and we've attained closer to 86, 87. So that's further upside in the potential economics of that study. Secondary aspects for adding value, I've mentioned the titanium and the iron, is also to extract copper, nickel, and cobalt. That reports to the tail after the magnetic separation, shown on the right of the flow sheet. We need to undertake flotation test work to produce a concentrate. Again, that's earmarked for later this year. So that's an additional value stream which we haven't currently recognized within that pit optimization study. So what are our strategic options with this? Well, firstly, we can look to produce a magnetic concentrate. It's the lower capital cost option, and we could produce a concentrate and we could seek offtake agreements to sell that with the vanadium in it internationally. This is an option we will investigate. However, it will probably most likely yield the lowest revenue, getting a credit for the vanadium, but not the full value. Another opportunity, Australian Vanadium have presented here this week. They are talking about building a facility 400 kilometres to the east of us, and they may be interested in toll treatment or sale purchase of the material. A higher capital cost option, however, is to produce the V2O5 flake, and it's one we can investigate. But the key thing I'm very interested in is strategic partnerships. We've demonstrated our neighbours. Windermere is a mine that was operating 15 years ago. They have most of the process infrastructure in place. And it's on care and maintenance. Our ore looks incredibly more favourable than what they have available to them. So we have the opportunity to utilise this infrastructure if we can develop a strategic partnership with them. This would allow us to fast track the project forwards. Just showing a quick snapshot of where the other projects are in the area. The key takeaway from here is that we are the westernmost closest to port, and we have a substantial resource. I'd like to draw your attention to Australian Vanadium. They're the more advanced project listed on the ASX. They're currently trading about 12 times the market cap of Viking. So we see that as the opportunity for investors. I think a question was asked at the start of the conference about where's the next 10-bagger. Well, I'd like to think we could be one of those. The reserves is what we need to define through our next level of work, and that's what we'll be doing in our forward plan. Very quickly on the lithium and gold opportunity, I'll go quite rapidly here, I'm running out of time. We have about 493 square kilometres up in the eastern goldfields. Our tenements are in gold and white. The white one's a pending grant. It's a very large land holding. Delta Lithium with their, just go to the previous slide. Delta Lithium at the top up here, they have a 12 million tonne resource. We're on along strike on the same structures. For this reason, we recently undertook a first pass exploration program. Auger drilling was completed. We defined 19 anomalies, a number of them of significant size. This is with soil sampling, so this is follow-up work they'll be looking to undertake in the near future. So wrapping all of this up together rather quickly before Chrissy starts walking too close, is putting this within a schedule of activity and work. We've been advancing the optimization study, as I say at the top. We're working through further metallurgical test work. Key step will be doing the drilling. We're fully funded, I'll reiterate that for this activity. We can do that drilling later this year. We'll update the resource, update the scoping study on an indicated resource, and that will give us the opportunity to embark on the process moving forward to looking to define reserves on this high value project. First hit, we'll do some field work, some mapping, some rock chip sampling, and look to expand on the anomalies, and then we'll be able to plan potentially a drill program later in the year. So my last slide to present the investment case down to the wire is that we've got critical mineral exposure to multiple commodities: iron, titanium, copper, nickel, cobalt, vanadium, as well as lithium and gold. Consistently delivered with the project in the last year. We're delivering the pit optimization study, the met test work and the like. We have a large resource that's demonstrating potential viability, and we're seriously undervalued compared to our peers. Thank you.